Welcome back, friends, to the channel. This is Caleb, the Heikin Ashi investor. I'm bringing you the weekly review this week of the stock market, major index ETFs, the NASDAQ QQQ, the S&P SPY, and the Russell 2000 IWM. We're going to take a look at the weekly and daily charts and see what has happened with our price action this previous week through the lens of the Heikin Ashi candlesticks. So let's go ahead and dive right in. What I have in front of me here is the QQQ NASDAQ ETF on a weekly chart. Our historic run of 20 plus weeks, or 20 candles to be exact, bullish, 140 days going straight up to the right, is over. We now have a bearish red candle moving downward. So, last week, if you've been watching these videos, last week we saw that there was indecision in the market. There was hesitation. We have a doji candle right here, upper and lower wicks. And then this side with the downward red candle breaking the low of that, we know that the momentum has shifted down to the bearish side. Down here in the bottom of the screen, the delta, I changed up a little bit. Instead of lines, I put dots, but same general idea. This is a price indicator that adjusts to the average of the highs and lows. So using the Heikin Ashi candles that are a little bit lagging because they're a price average, this indicator down here often moves a little bit faster once price starts turning over. So you can even see here that we're still above the zero line down here, but price started dropping down here back in June, flattened out a little into July, but now we have dropped again and we are right at the zero line. On most of these types of indicators, the RSI, the stochastic, the MACD, moving average, convergence, divergence, above the zero line is generally considered bullish territory and below is bearish territory. You can see if you look back here in August and September of 2022, when we crossed over this zero line on this big red candle here, we then continued down for multiple weeks. And so that's a pretty good sign of what's happening. All right, we're going to go ahead and look at the daily chart. So a little bit more of a granular view. The QQQ, we have gone ahead and put in, like I talked about last week, this lower high here, and we have now moved down on the daily chart. We took out these lows and we're coming pretty close to these lows. We have 1, 2, 3, 4, 5, 6, 7, and 8 bearish candles in a row. Down here in the bottom, we are in bearish territory, and we actually had another cross right here to the downside. So not a time to be getting long in the NASDAQ or tech stocks. We are in bearish territory. For how long, nobody knows, and we're not going to guess. We're just going to look at what the price is doing and make decisions based off of that. So kick it over here to the SPY weekly chart. On the SPY, pretty similar action has happened here. So nothing really to elaborate on. These two ETFs are really working pretty similarly, not quite as much of a red candle with a really tiny little upward. I just wrote right over it. You can see a little bit on the top of that candle of a wick poking out the top. But needless to say, down here at the bottom of the screen, we're crossing down underneath our moving average dots, and we're heading closer to the zero line. So zoomed out view weekly, SPY is also headed down bearish. And down here as well, we had the cross at the bottom of the screen, and up here we have consecutive bearish candles on the SPY. So looking pretty red. Let's kick it over here to the IWM. This is the Russell 2000 small caps. We had highlighted this zone here in previous weeks where we had bumped up against it. I talked about on last week's video how we just by 1 penny tipped over the high, but then I pointed out, let me click on this button here, I pointed out that you can see right there in the middle of that candle, The real price, visual order, bring to front. There we go. You probably see that a little bit better now. The real price was down here halfway into the body of the Heikin Ashi candle. When that happens, that is a sign that a reversal might be upon us. And then sure enough, this next week, we had this red down candle, a little bit of an upper wick, but a much longer lower wick. And then you can see right here, the end of my mouse pointer, and I'll circle it. That's the real Japanese candle close price is down here around 190. So took a move to the downside as well. Looks like we have been rejected yet again from this area right around 200. Down here at the bottom, not as severe of a move down in the delta, or not as far along, if you will. The QQQ, which led the market up, is now leading down on the pullback. Going to the daily chart, as mentioned last week, we were kind of hanging around in that zone, just barely peeking our head out below it up here. But now this week we have just gone ahead and put in down candles. And down here we had the cross over the zero line there. But the action is a little bit flatter. It's not quite as intense as we go down. The next nearest swing low, significant swing low, is down here at 180. We'll see if we happen to get there. It's anybody's guess. But as you can see through the three different major index ETFs, we are moving into bearish territory. We are full on pulling back now. How far will this downtrend go? Nobody knows, but we're going to keep an eye on the Heikin Ashi candles. They're telling us what's happening with the price, and we're going to make our decisions based on that moving forward. So I hope you enjoyed this. If you trade with the Heikin Ashi, hopefully this brings value to you. If you have questions, please leave them in the comments. And if you find value in these videos, go ahead and subscribe to the channel, as I'll be putting out more content on the Heikin Ashi technique in future days. Have a great week.